Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, if you've listened to me at all for the last few months, I know I sound like a broken record. This thing has been on a cruise. This is the S&P 500. SPY is the ETF. And you can see because of that, volatility is extremely low. So low volatility, prices at all-time highs. This is the S&P 500. If we look at the NASDAQ, which is QQQ up here, exactly the same looking kind of scenario, also low volatility. And the Russell, which is small cap stocks, obviously same thing, very similar pattern, all same low volatility, looks all about the same. So what are we going to trade? Well, we're going to go to Google, symbol being GOOGL, and you can see this is, well, that's a dividend, but this is past earnings. There's earnings again here, but for whatever crazy reason, we had this huge shoot up recently. Don't know why, don't know what happened, not really important to me. I'm just looking to see what's going on. I see this thing taking a huge leap over the last few weeks, and because of that, volatility has spiked a bit. You can see outside of this thing, which was the tariffs, that was that huge spike. Essentially, this is as high as volatility has been in Google for quite a while because we don't count these spikes for earnings, right? So outside of this, get that out of here. Really, this is just the leftover from the tariffs. This is as high as it's been. You can see this is 25, where the rest of the market was 6, 7 when we looked at SPY, Qs, etc. So what are we going to do here? Well, myself, being a contrarian, when I see something like this, when I see it shoot way up in a short amount of time and volatility spike, I am making the bet that yes, it might continue up for a little while, but over the next 30 to 60 days, I'm planning on it kind of taking a breather and coming back down. So, that being said, what I want to do is high volatility. It's at this peak price with a huge jump. If I think it's going to start to go down from here, I'm going to look to sell a call vertical. So, let's go to the trade page, and here's our choices for which expiration cycles we want to use. Now I know already that weeklies are always less liquid than monthlies. So I already know without even looking at these, I know that this is going to be more liquid. And because our window is 30 to 60 days, I would rather have more time to be right in this case. Even if this was liquid with only 32 days tomorrow, okay, that's like a month. But in this case, I got 2 months to be right, right? It can go up for like a week or two. As long as it comes down again in the next 60 days, this will turn into a winning trade. And tomorrow, this will be 60, which is still in our wheelhouse. 30 to 60 is our window. It'll be more liquid than the other ones, so this is what I'm going with. So when I open this up, how do I decide what vertical to sell? Well, remember our rules, 33 to 40 cents per dollar width of strike. So these are $5 wide strikes. 5 times 33 cents, again, that's the minimum we're going to accept per dollar, means, I'll just type it out here. So if 33 cents is the minimum amount I'm going to accept for each dollar width of strikes, and this is $5 wide, that means the minimum price I'm looking to accept for this trade to make it valid is 165. So how do I make this trade and make sure I do it correctly? All I do is I look for $1.65 or more, and that means the trade is valid. So if I start right here, right, 254, 255, 260 is as close as I can go. So if I sell this vertical right above where I'm at, you can see 33 to 40 cents, $1.65, 40 cents times 5 is $2. This is too much. This is too much credit. I need to be at between $1.65 and $2. So what does this mean? This means I got to go further away. I got to accept less credit. And the way I do that is by going further away from the stock price. And by doing that, I got a better chance of winning, obviously, right? The further away this vertical is, the better my chances of winning. And because I'm doing that, they're obviously going to pay me less for this trade because I'm not going to give you a lot more money. You're going to get less money the further away you go. So I go to the next one up, 265, and I sell this vertical and I see where we're at. $1.77. Perfect, right? $1.65 to $2 is my window. This is a perfectly acceptable trade. Just out of curiosity, what happens if I go a little bit further? I sell one more further away. $1.55. That's not enough, right? It's got to be $1.65 to $2. So with that quick little test, This is how my rules foolproof my trade to make sure I'm doing it correctly. This is the only vertical that fits our rules. The other one is too high, more than $2. The other one's too low, below $1.65. This one is perfect, which means this is our trade. We're going to sell the 265 call, $10 above. We're going to buy $5 away because that's the closest we can do, a $5 call. As long as tomorrow everything stays the same and I'm between 165 and $2 credit, this is an absolutely valid trade in Google. And again, I'm doing a short call vertical because I think over the next 60 days, this will eventually kind of bleed back down below what I'm looking for it to do, and this will turn into a winning trade. Purely my assumption. As a contrarian, I always go against the grain. This is going against the grain. I think it will kind of, kind of wither away over the next 60 days. And that is our trade in Google for tomorrow. Hello everybody, Cal here with an ancient Chinese proverb which I'm sure you have all heard before. Give a man a fish, you feed him for a day. Teach a man to fish and you feed him for a lifetime. Why am I telling you this? Because most services out there just give you a fish. They tell you, oh, make this trade, I made this much money, I made millions of dollars, do this, do this, do this. That's not my goal. My goal is to teach you to fish for a lifetime. I want to teach you the skill of trading so you can go out and make as much money as you want to on your own. And the best way I've come about to do that, at least for me, is to basically set up an alert system where you can watch me trade in real time. You'll get texts or emails directly to you in real time of the trades I make every week. I do 2 to 3 trades a week, so it's going to tell you everything you need to know about the trade, why I did it, how I did it, what I did as far as specifics. And then you're also going to get the closing alerts when I close them for the maximum profit potential on these trades. Like, how do I close these trades? Why do I close them? To get the best profit potential over time. And I want you to do it without any risk, which is why I've set this up for $1 for the first month. You'll get my option income alerts for the first month for only $1, and you can cancel anytime, so there's no risk on this one. You're risking $1 to see if you can turn that knowledge or learn to fish. You'll use this code, MakeB1. If you want more, we have the Option Pro Alert, which is the exact same alert, but it also gives you access to every course and webinar I've ever made. It's a 13-course bundle, obviously thousands of dollars in knowledge. Again, you can do this using this code, and this is only $19 for the first month. And again, you can cancel this one at any time. So again, a risk-free attempt to learn and see if it's something you want to do. Here they are right here. If you want to go do it, you can go to sharpertrades.com, go to the products page. These two will pop up. You can type in these codes down here, or you can just go directly to this link right here and it'll build the code in itself, or the attachment I have at Udemy along with this little video. So again, my goal is to teach you to fish. I can't think of a better way to do that than to trade side by side with me in real time. Hopefully you jump on this opportunity. Hope to see you soon. Take care.